Good morning, everyone. Welcome back to our weekly stock market video. This is where I do analysis on the overall market, S&P 500, QQ, as well as the MAX 7s. We'll be taking a look at dark pool datas, as well as is it time to short the market or are we continue to hit all-time highs? And before we get into charts, let's take a look at all the datas, sectors, dark pools, and earnings. All right, so sector rotation still continues. Just remember last week we were talking about energy was getting rotation and other sectors were a little bit weak. And now all the other sectors are getting rotation and energy is weak. So if sector rotation still continues, market is not going to have those 2 to 3% downside days that the bears are looking for. So what you want to see is right XLK, which is the biggest weightings, the biggest names, all the MAX 7s. That's what we look at the MAX 7s all the time. That you want them to do really bad, and especially when tech leads to the downside and SMH as well at the same time, the semiconductor sector, you have those downside days, which we haven't had in many months actually. So we're probably gonna get one soon. I wouldn't be surprised if we get one in October, especially October is a weaker month. And yeah, in terms of fear and greed index, smack that in the middle. So this is not helping us at the moment. And AI and system data, this is what you kind of see around the tops where everyone's bullish because people are still foaming in, and a lot of people are bearish because they want to short the top of the markets, and you barely have anyone neutral, right? You can see historical averages pretty balanced, right? You can see 30s, 30s, but this is what happens when a lot of people are being bearish, right? The economies, all that kind of stuff, bearish on the news, but we're still at all-time highs. So there's a lot of bulls as well. So we'll see. This is what happens when the volatility will start to increase as this start to drag on longer. In terms of earnings, really nothing. If you're in one of these, none of these are market movers, but if you're one of these, just take a screenshot. And dark pool. So we had this 2 weeks ago, right? The MAX 7s, which is the biggest weightings in both Qs and S&P, right? We had this huge number one dark print here, which is, let's see, where's my MAX 7? Which is about around here, right? On this, I think it's 17 or somewhere around here. But anyways, so dark pool doesn't mean that once it comes in, right, it's the top, right? Institutions don't nail tops either, right? It's not like everybody's not a market wizard. If you have a crystal ball, let me know. But so it was around here. We overshoot a little bit. It's no big deal. We overshoot those dark pools here as well, right? I think there's a lot of dark pools around here. And then we could overshoot it, right? We back test it again, overshoot it a little bit, and all that kind of stuff, and then rolled over, right? Doesn't mean we're gonna do exactly the same thing here and just chip chop here and then roll over, but it is showing signs where we're slowing down a little bit, right? We got this double top on Thursday, while the Qs made a new high, right? So the QQQ made a new high above this high, right? Broke last week's high, while the MAX 7s made a double top. So that is just an initial like little red flag for the bulls. That the biggest names are, getting a little bit slowing down a little bit, right? You can see this entire way up. We pretty much followed the cues, right? We actually probably led the cues, right? Every time it's a higher high, higher high, higher high, higher high, higher low, higher high, higher low, higher high, and continuation of the uptrend. So what I want to see from the bears is we need to break this low, right? This 63.51 low, which is this low too, right? If we can break this low, which is the last pivot of the uptrend, then that's a first shift that we had into the bear side, literally since this low, April low. So 6 months, right? Yeah, because this entire way up, we never made a single daily downtrend, never really broke any pivots, never broke any higher lows. Each low is always a higher low. So when it does happen, we'll see how the market reacts, right? Is it going to be like a 3% down day, and next everybody buys dip, we hit all-time highs? Or are we going to come from actually weekly downtrends, daily, weekly downtrends, higher term time frame downtrends, right? Get some monthly consolidation, right? We zoom out. We've been up for 1, 2, 3, 4, 5, 6 months. So getting a little bit of monthly consolidation would be a surprise to me. But we'll take it one setup time. Bulls, bears definitely need to crack that low for us. So yeah, so this dark pool was pretty much the number one largest print, and right around this area. And economic data, I don't even know which one is going to be released because government is still shut down. We didn't get the jobs and the data last week, so we'll have to wait until government reopens. But we're probably going to get the minutes since it's already written. It's not like they do it the day before or anything. And Powell's probably going to speak again, so we'll see how he talks about we got a pretty bad ADP report last week. So, which is we'll see how he talks about it. But we are getting a rate cut our next meeting. So, all right, let's take a look at the charts. So, we made a new all-time high here on Thursday, and tech was a little bit weaker on Friday. So, on Friday, you were seeing a ton of rotations between XLV, XLF, which was the financial sector, and the healthcare sector was super strong, while the Qs were a lot weaker, right? So you can see, let's go to the 15 minutes here. So pretty much, right? You can see right out of the open, SPY was just skyrocketing over and over and over, right? While the Qs couldn't even break its opens high, right? And then once we topped out on the Qs and rolled over with the semiconductor sector, then the SPY rolled over, right? This was kind of like where the rotation kind of stopped, intraday at least, not on the longer term time frame, and all the sectors rolled over a little bit together. So this is just like the initial sign where maybe we're slowing down a little bit. But that being said, no real structure is broken, right? SPY literally closed near the highs, all-time highs, right? And we didn't even break yesterday's low. So no huge red flags, just initial signs where we're seeing a little bit of exhaustion on the upside, right? We're getting these slow grind up days and pull back a little bit, up day, slow grind. So, but that being said, no red flag. Qs obviously did broke yesterday's low. But let's see if we can actually crack some structures. Right, we zoom out to the daily chart. This is just like nothing at the moment. So what I want to see from the bears, right? I mean, look at this low is pretty much marked off of this low. But bulls actually bought the dip right at the low, but bears actually, right? You can see that low is literally prior highs acting as support, V-shape right here for like 0.3 to 0.4%, almost all of this move. But bears actually held it this time, which is probably like the first time they actually did some defense. But let's see if they can actually do some offense. So bears are back to square one. So every time we hit new all-time highs, bears are back to square one, right? They need an initial big move like this to form enough space for a lower high and lower low. And once we hit new all-time highs, this is all negated. So now they're back to square one. Can they make enough space for us where we can potentially shape the lower high and lower low for the downtrend? So that's what I want to see from the bears. And I wouldn't be surprised if we back test around this structure, right? This is pretty much the last real structure that we built along the way on this entire way up from April, right? So you can see, why did I not just drag this over? This entire way up, it's one straight move, right? There's no real like structure other than here. There's a little bit here, and then there's a whole bunch here, right? So if we come down, this would be where like the first major support would be around this area. So if you guys are like dip buyers or like swing trader where you want to dip buy and swing for a little bit, not like day trade for it, this would be probably the first major area where you'll get some defense from the bulls. And if we crack that and cracking these red lines and all these whole structure, and get a longer term consolidation, like the monthly consolidation, then this would be the next structure, right? This structure is pretty much off of this structure, so it's the same. So this will be the back test of the prior all-time highs, and that'll be probably where most people is gonna be buying, adding here around this dip for the next leg up, is my opinion. But we'll have to see how the price action gets to here and here. Right now, we're just predicting these random scenarios, but that's what I want to see from the bears. Yeah, because monthly consolidation is going to be due, right? We don't just go up straight for, we're not going to go up another 6 months, right? You don't see, even here, we're super strong coming out of the bear market, right? We were up for 6 months, got a little bit of consolidation here, right? This is like this would have been a 11% pullback. So if it's let's just say 11, yeah, right? 10% pullback, back test, all-time highs, super healthy pullback, no big deal. Right? If we come back test that structure that I talked about, where everyone's probably going to be buying the dip there, and if that breaks, that's where, if we back test all-time highs, right, and then bounce just a little bit, and then breaks down through here, that's where probably real fear will come in. I'm not saying that's going to happen. That's going to be up to the bears, and we'll see how it happens when we do backtest, right? And we'll see how it trades around here. But at the moment, no signs of bears anywhere at this given moment. So bulls, you guys just keep grinding up, right? Make higher lows, higher highs, higher lows, higher highs. That being said, right, this higher high, it's a little bit lacking follow through, right? Right, we just broke the high and then we came back to it. So next week, if you're a bear, you want to pretty much give back this entire move, crack this pivot, and then that would probably start something, some weekly, monthly consolidation for October. Yeah, just initial signs of weakness here, where tech actually didn't lead the way up for the first day. So we'll see if tech bears actually show up next week. All right, let's take a look at SPY. So because XLV was so strong on Friday and the whole week actually, right? We're just looking at the sectors. Healthcare up 7%, right? Which is insane. So it held up the market essentially, even if tech was a little bit weaker. So yeah, so that's why SPY did so much stronger than the Qs, right? You look at Dow was green. Dow is mostly healthcare and financials. So that's why sector rotation is so important. That being said, we are trading at the upper range of this channel, right? Up the resistance. I mean, it could just keep on going if it wants to. So essentially, every week bears got to prove it, and they haven't proved it. If they don't prove it, just stay on the bull side. Obviously, I wouldn't recommend anyone going long here for a longer term position, right? If you're a day trader, you can get anywhere you want, whatever, anytime, right? But buying up here, I personally wouldn't. If I was like holding for a longer term position, obviously it's probably going to be higher than here if you held it for a couple of years. But are you going to sit through a 10% correction before it happens? It's up to you. Yeah, so let's see if bears show up here. You can see Thursday's back test was just this back test as well. Bulls just instantly bought the dip, which is pretty crazy, right? And you're asking yourself, like, who's buying these little dips right here, right? Which is literally just dip to prior day's high and then V shape, including highs, right? It's pretty much probably a lot of it would be algos, right? Or in positive gamma, everything is in an uptrend. Literally every single time frame is in an uptrend. Why wouldn't you buy the dip, right? But it just, for us, it's a little bit psychological, tough for some of us, where we're just looking at the chart and we're like, you get that fear of like, okay, if I bought here, maybe it's going to be the top, all that kind of stuff. So yeah, a little bit more psychological today for the video, but if you just bought here, right, and you just set your stop loss, right, it's very clear it was prior day's high, right? It was this day's high, and mark exactly this low, right? You get in, set your stop loss right there, get stopped out. If we roll over, it's fine. Even if it feels like you're buying at the highs, usually you still want to lean on the bull side because everything is an uptrend. But there will be one day where it doesn't work out and you get that big flush. But if that happens, right, you're stopped out. Let's say we get this. Let's say Monday becomes a negative 3% day. We come all the way down here to 654, and you got in here at 667 when you bought this back test of the prior day's high. Your stop was going to be at 666. You just lose like $0.1 or whatever, right? So it's not a big deal. But yeah, is it time to short the market? I mean, you could, right? If you zoom into the smaller time frame, you can play off this high or this high, but chances are you'll probably get stopped out because everything's uptrend. But if that's what you guys want to do, you try to nail tops. As long as you have a clear level to play off of, that's perfectly fine. That being said, this is probably the weakest day we've seen so far. Right, this past week, because you can see every time we get these dips, it's V-shaped to the new highs, and except for Friday, but it's still no big deal. All right, let's take a look at the Max 7s. I'm just rambling on. Yeah, so Meta, we talked about this one being the weakest team bear for the past 2 weeks because of how it has overhead supply, essentially, right? We come back up here. This high was pretty much against this high. We made a lower high, and then we rolled over, actually, which is pretty surprising how much Meta dropped and Q still made new highs. That's pretty much what the power of rotation is, right? Meta rolling over, Apple making new highs. Market's not going to tank. So that's actually a weekly downtrend confirmed. So Meta actually confirmed a weekly downtrend here. Highs, lower high, lower low, right? Broke the low. So that's a weekly downtrend confirmed. And we broke the EMA 12 on the weekly bounces. And fill the gap. I think I talked about filling the gap if we do break this pivot 2 weeks ago. But so Meta is pretty much at its first real structure support here. So if we make another leg down into 700, we're probably going to get a bounce there to make another potential lower high here. I wouldn't be surprised if Meta comes to 700, get a bounce, come back to back test this, kind of like this structure around the 730, 740 zone. And then if it's going to market starts to roll over, this is going to make a lower high and lower low. And come back test 700 again. If we crack 700, we're going to 685. But it is a little bit oversold on the short-term time frame, so a little bit of bounce. Wouldn't be surprised if we come to 700 and then bounce from that scenario that I just talked about. So team bear for Meta, and let's take a Tesla. So Tesla, this is a kind of look, a blow off top kind of look, but at the moment we haven't really broken below the structure yet, right? This whole cluster of volume here was traded for a couple of weeks, still holding as a support. You can see where the low of the day, 416, is pretty much the low support here as well. So if bears really want to get some real downside going, they need to break this 416, 413 zone here, right? You crack that, it literally has gaps here. this is a straight shot down. You can see not a lot of volume here, right? The volume profile. That means it's a lot easier to crack through it. And there's less volumes. And then when we do come down to this 350 zone to 316, there's going to be a lot of supports here, which I personally think we're probably going to backtest this here at some point, 355s. But let's see when bears can crack through this whole thing, especially this little no volume zone here, right? You can see even here, it's not a lot of volume here as well. So it's more like a, right? So that's why it's easier to fly through it upside and fly through on the downside. So bull's worst fear would be longer term tightening range, where I talked about this one every week. But for those of you who don't know, a tightening range is just big move up, big move down, big move up, big move down, and it just continues to tighten. And the move never exceeds the prior highs or prior lows, right? See this low here, it doesn't exceed the prior lows. This high here doesn't exceed the prior highs, and it just continues to tighten up. This is a picture perfect one right here, right? Where we were looking at this tightening range together, and then it broke bull on bull side. Prior highs, right? It never exceeds the prior highs or prior lows. And then this is also another one. So Tesla, right? Tesla always does these tightening ranges. Huge move up, big move down, big move up, down, up, down, right? These highs and lows never exceed each other. Even in a smaller time frame, you can see they do the same thing, right? These lows are just lower highs, and then we broke bull here. And because this is a longer term one, which took like 3 years, when it broke bull, it moved a lot more. The smaller it is, obviously, the less fuel it is, right? This is a little bit smaller, but it was still a nice move. Yeah, so it's characteristics of this stock likes to make tiny ranges. So if it does come down here to this 350 zone, then we may potentially look for that big tiny range around these areas, right? And it bounces from here. Let's say it comes to the lows around this 300, and then bulls by the dip, right? 300, the lows is pretty much the high of the structure. And then we bulls by the dip here, and we bounce back around these maybe 360s, 400, and then we tighten into the end of the year. And then we'll see if we get a bull move into the end of the year. That would depend on the overall market as well. All right, let's take a look at, let's see, actually, let's zoom in a little bit, see if there's any kind of, it actually held a little bit better into the end of the day. So relative weakness in the morning, and then relative strength into the end of the day. That's funny. But which kind of makes sense. We were kind of oversold. Yeah, down 13%, straight move. Tiny bounce, but bears are still in control of the short-term time frame, and the hourly and the 15. Actually, very clear hourly and 12 rejection here. Grind down. 4 hours. 1 rejection so far. So we'll see if it continues. All right, let's take a look at Amazon. So Amazon, a bit weaker too. It's kind of gearing up for that bear flag look. Big move down. This is why I stress about big move down so often on the overall market, the Qs and the SPY, so that there is space, right? You get these weak bounces, and then you can see at the same time you have overhead supply where it acts as resistance. That's why I always talk about not shorting all-time highs, because there is no resistance. There's no overhead supply. There's no sellers. There's no sellers trying to, sell you their stocks, or there's no essentially there's no bag holders or any kind of all kind of negative emotions where it comes in where people want to sell, or any kind of fear, right? And nobody's losing money when you're all-time highs unless you're shorting. Which if you're shorting all-time highs, you're losing money. You gotta cover. It makes the stock go even higher. That's why it's so tough to short all-time highs. Obviously, if you keep doing it, you're gonna nail the top one day, but you're gonna be stopped out so many times already. right? Is it worth it? If you have a really good system, obviously you can go for it. But most people don't have that. All right. That being said, so these highs, right? Amazon, this high is pretty much the backtest of this all-time high structure, currently acting as resistance. And because we have a daily downtrend come from here and follow through, right? We broke this pivot and got a lot of follow through and a ton of space for bears to work with. So on this bounce, it's a weak bounce and rejection of prior structure. This is exactly what the bears want to see, essentially. Let's actually look, see if we, yeah, it's pretty much a bear flag. I mean, we poked right above it in the yellow mark, but I consider this to a weak bounce. I mean, you can measure from here or here. If you measure from there, it's to the tick. But we did make a higher. So it's not really one move, but whatever, same thing. Here and here, this is essentially just a weak bounce. So let's see if bears can crack 216. And if bulls want to negate this and play defense at 216 or here, they need to bounce back above Friday's high into this structure again. And if they can crack back into the structure, then it could potentially become more of a balance sideways kind of trade, kind of tightening range, right? Higher low, higher low, higher low. This is not really a tightening range, but more like a, I mean, it still could lower high, but more of a sideways trade here if we don't break this low and come back into the structure. But if we get follow through to the downside, then I'm looking down at 211, which can potentially happen to the downside, especially if market is topping out and consolidating. Then we'll get these down follow through on the downside. So Meta and Amazon both relatively weaker, right? You can see Qs is closing literally near all-time highs, and Amazon and Meta trading lower in this range. So yeah, if it breaks down, 211 is my first target. Then we're looking back to 206. Breaks upwards. 226 is my first target. Then we're looking back up closer to 228, around low of the structure. All right, let's look at Google. So super strong, no signs of real, just tiny weekly consolidation at the moment. And bulls are actually still buying the dip here. So this is what trying to short top looks like. It's really tough, right? It's like all this entire way up, you're just banging your head. Stop out. You got every day makes a new high. That being said, we did make a tiny daily downtrend here, but no follow through at 224, which makes sense, right? This 240 is the first tiny sideways structure where they built for 4 or 5 days here, and bulls are already playing defense, right? But if once this cracks through those structure, is really not that much from here all the way to like here. So there's a huge, essentially volume gap here. I personally wouldn't be surprised if we're back test here and here, and this rolls over all the way back to around this 206, 200 mark at some point. Yeah, it's only a 15% drop. You know how I talked about that back test of the prior all-time highs on QQQs? This is what it would look like on the Mag 7s if we do back test this level. Yeah, and Google will probably fly through these like like knife through, but there's literally no volume from here to here. And it will exacerbate that move if we break this low, because all the buyers from here, so essentially these are late buyers. I know there's a lot of psychological stuff today on the video, but so these are all late buyers. So psychologically, you guys are doing fine when you're making new all-time highs. But once we crack the low of all these late buyers, right, all their stop losses get hit, they get panicked, and then there's no support here to here, then it'll cut through there very easily. Through that down to at least 206. Even this whole move, there is not a lot of support, right? Because of this structure, there is volume, but on this way up, it's one straight move up. All the volume is from here and here. So I don't be surprised if it do come down all the way to test to 201 to 206 at some point in the future. They back test this high of this whole structure. That being said, bears really haven't followed through at all at the moment. You see, bulls are still buying the dip for the last 3 days, even on Friday. It's, yeah, on Friday is relative strength. Google is making new lows over here. Sorry, not Google. The Qs are making new lows over here, and Google was making new high of a day. So yeah, so at the moment, Google is still relative strength. So if we want to see the market roll over, we want to see Google switch to a relative weakness and break this 340 low to 240 low. All right, Microsoft just chip-chotching around for a couple months. Essentially, it's just battling between two structures, right? All-time high structure acting as a resistance at the lows, super clear, right? Rejection, 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 rejection. Very clear support. Bounce, 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 bounce. Break above prior resistance here at this 519. Now acting as support at 519. So it's between battle between 519 and this 518. Break above 518. Now we're back to all-time high structure. We're gonna go 525. Break below 506, 509 zone. We're gonna go straight to this 497, 500 mark. And when we do get that bigger term market consolidation, we're going to break this 500 mark. And then same idea. Really not that much volume here from here. If we break that 500 mark, let's just look at the whole thing. We're probably going to come down. Even if we back test 462, this prior little blip is going to be, let's see where that bull flag is again. Yeah, it's pretty close actually. So even come up to 474, it's still a monthly bull flag. It's still, that means it's a very shallow pullback. It's still in the strong, still in the bias for the bulls. If we come all the way down back to here, then yeah, we come all the way back down to here. It's still not even the 50% retracement yet, so it will still favor the bulls for the next mounts. Yeah, so be a little bit cautious here at the moment. All right, Apple. So this guy is holding up the market for the past week. It didn't even drop at all, but I wouldn't even call this a resistance. It was literally just one, and we're still under it, but that's like 1 day of volume here, right? So, but it could double top. Who knows, right? It is showing signs that we are. There's a lot of sellers here. All these upper wicks, but at the same time, well, bulls are buying up every single day. So we'll see who wins out this little tiny sideways range here, and next coming week. Right? Obviously, if we break 250 and roll over and come back down, there's a good chance we cut through all this and come back to 240 to just back test. If we break above here, then we're back to new all-time highs, and Apple will also be breaking new all-time highs for a while. It's been almost 10 months since December 2024. So if that happens, and we get those follow through, okay, Q is going to make new highs, right? One more leg out probably. So be cautious of that. Doesn't mean like market's going to top out on Friday. Especially there is some setups in Max 7s where right Apple breaks to new highs and follow through, while the weaker ones, Amazon just bounces a little bit into its tiny range, right? Comes back to here, even if it ends up being here later on, just a little bit of bounce into its tiny range, right? And then Meta, where's Meta? Meta just gets an oversold bounce, a weak bounce. The market's probably gonna go up like 1 to 2% just because of that, right? If you get all these bouncing together, Meta bouncing 2-3%, Amazon bouncing 2-3%, even if it ends up being lower, just happily speaking, right? It go like this, then goes lower, but just from this bounce plus Apple making new all-time highs like this, market's probably gonna go up at least a couple more percent before it pulls back. So be cautious of that. But that said, if we roll over right here, reject from this double top, pulls back, and the weaker ones also pulls back with it, then market's gonna probably get one of those bigger drops. But that being said, Nvidia, it's like this, right? Nvidia makes new highs, and the market stays afloat for the last 3 days. We are not. I don't want to say we're not getting follow through, because this could be just a back test bounce. Next thing you know, we're up here at 200. So be cautious of both sides at the moment, right? Nvidia back test is here, bounces. Next thing you know, it goes to 200. Apple just makes new all-time highs. Q's is gonna make one more leg up. So what you want to see as a bear, Nvidia fails its breakout here, right? Comes back to 183 and fails the back test, and then comes back right into the structure. And then Apple rejects that double top, comes back to it as well. Okay, then we will have a potential more downsides from here. So, but if this just back test bounces, then the whole semiconductor sector is going to be rocketing with it, and it's going to be tough to short that. So, all right. If you guys like it, want to talk more about psychological stuff, let me know in the comments, and feel free to like, share, and subscribe to support the channel. And I'll see you guys tomorrow for commodities update. And have a great rest of you guys' weekend.